What's good? What's good? Welcome back. It's been a good week. Hopefully everybody is doing well. Nobody can say they were first today. I was first. But yeah, welcome back, guys. Doing well. How are you doing? How's the gang doing? We'll be starting approximately 5, so let's switch over to the charts. How to trade actually. I am not ill. I'm actually doing quite well. Maybe it's the mic, I don't know. I also just had a bit of food, so. But a lot of people I actually just recovered from, I don't know, something. But I think most people in London actually are, I think, a little bit ill at the moment. I don't know, I think like it's just a virus going around or whatever it is. England is, yeah, man. The weather here is just appalling, man. It's just so bad. It's not even just bad, like it's bad, and then it kind of changes to be like good, so it gives you hope, and then afterward it just gets even worse. So it strips away your hope, but then you're like, oh, okay. But if it just goes back to like, let's say it was like a little bit rainy, right? And then you're like, oh, okay, cool. Like, it's a little bit raining, it's a bit shit, but it's fine, right? And then the sun starts coming out, and then just like for 3 minutes or whatever, and it'll start fucking pouring right after that, right? So you just want it to go back to your initial state, right? Because you accepted that, but no, it doesn't happen. It's so bad. I hope Don fully experiences this entire weather when he's here. Possibly the worst weather in the world. And it's just crazy windy as well, for like no reason. Yeah, none of it makes sense. Afternoon, Yannick. It is evening for me, but afternoon. Hope everybody is well. We've hit 10 people. Just waiting for a couple of the Zoom boys to join up, and then we'll get started. Any lag today? A little bit. We're doing okay. If you have any questions, yes, feel free to ask them now. You can always ask anything at any given time. I normally scroll through the entire YouTube anyways, for kind of like last minute questions and whatever, but cool. We have a member on the Zooms. I'm gonna get started. I think we hit 10 people on the YouTube, so gonna get started. Just, I think, don't get distracted by this. I think it was in a trade after this rebroke the lows here. Got a pineapple, and I think I closed full at like basically break even, because it was like 3 p.m., 4 p.m. I was like, nah, I'm not really a part of this. Slowing down, breaking the lows to come back up. I didn't really like it, so closed full essentially, but it did kind of worked out, tapped into the kind of area here which I was looking to take profit, I think. So all good. Let's just remove everything because none of this matters anymore. You wanted to ask about the pre-motion setup. So those setups, to be honest, right, they're just names for plays that I potentially was testing. They're not necessarily plays that we have in the playbook, right? Pre-motion for me It makes sense for me because it's a specific thing that I look for, right? But if it's not part of your playbook, don't have it, right? Create your own plays, create your own setups, and then name them however you like and however it makes sense to, right? But yeah, I would say don't focus too much on what kind of pre-motion means. Stick to, you know, the basic playbook stuff that we normally look at, so breakout, fake out, and all that stuff here. Hey, Kev's here. How you doing, Kev? Hope you're well, man. We have another in-person soon. Are you coming to London? I don't know if any of the old Gano are going to come to London, but it'd be good to see them. But cool. Let's get started. Right, monthly. We have these two lines since, I think, when was this candle? This candle was December. We've had these two lines for 3 months now. Nothing has really changed in terms of these two lines, right? The only difference is previously we were in the zone for the monthly, and now we're outside of the zone for the monthly, right? You gonna try to make it? Yeah, nice, man. It'd be good to see you. Yeah, so we're potentially gonna get a breakout, but it is March 14th. March is a long month, right? We have 31 days, one of the longest months in the year, in fact, right? But you have another 2 whole trading weeks plus tomorrow, which is Friday. So you have a lot of time, right? And if this is only halfway through the monthly candle, you're wondering, right? Is this the top wick for us to rip down? Because we've rebroken the highs, but we've kind of, you know, started hovering here a little bit. So even if we do want to start going back up, we're probably going to need to see liquidity, right? And within this candle, what that's going to look like is potentially you coming down, filling some ranges on the lower time frame, and then retesting those highs. So that's probably what I'd expect if, you know, price wants to continue pushing up, right? But just based off the monthly chart, we're understanding that previously with these two lines, we tapped into the most recent support, right? At 1990 sort of areas, right? 1991, 1982, these sorts of areas. And after that, because we rebroke the previous monthly low in January, right? Came up, closed bullish. Any given point, we were going to get a fill towards around this 2070 areas, 2075, which we did, and price just started pushing, right? So now that we're pushing, obviously, I'm still bullish for the month, right? We're pushing pretty aggro at the moment, and if we get a closure like this, who knows where next month is going to go, right? But at the moment, we're understanding that price is extremely bullish. So let's drop down to the weekly. Weekly previously closed extremely bullish, right? And I'm going to add one extra line here. This extra line, similar to the kind of overall monthly, I'm actually going to just turn this down a little bit. But yeah, like, so similar to your overall monthly chart, right? We had these wicks here, right? These wicks here. So I put a line there because it's a resistance on the smaller time frame, right? And on your weekly, same thing. You have a resistance here and you have a support now because you kind of closed, well, you closed, but you kind of have a wick tapping into this 2150 level, right? And at around here, you've seen a little bit of rejection, right? If price wanted to continue pushing down, you would have, right? And this rejection itself was around 120 pips. Pretty nice rejection, right? So if this is the start of us printing, you know, potentially a support for price to drive from, then fantastic, right? We're going to look for a break of the lows and then a re-break of the highs. But on your weekly candle, right, we have tomorrow, which I think is affected by news as well. So if we do start pushing down for tomorrow, it may not be the direction that price actually wants to travel in, right? Because any given point, your previous weekly closed bullish above this range, right? So you're expecting price to continue pushing. Where to? I don't know, because there's no data to the left, right? But, you know, if we want to continue pushing, we'll probably grab liquidity first. So in terms of the cycles of the market, right, we're understanding we had our directional push right here, and now we're consolidating a little bit, right? We're kind of slowing down a little bit. We're kind of in a range on your, you know, potentially higher time frame like the daily or the 4 hour. You're in a range, right? So wait for liquidity to happen, right? And liquidity can come in many forms, which we'll discuss later on, and I'll kind of talk about what I'm potentially looking for. But daily, right? Daily is interesting. We have a daily open, right? I think just now actually, but daily respecting this area, right? Pretty nice. And you also have daily respecting this area as well, which is fantastic, right? Because now you can actually finally say price has slowed down and stopped somewhere, right? Because you have a bearish and a bullish candle indicating support. You have a bullish and a bearish candle indicating resistance, right? So you have overall a range being formed here. Pretty solid range as well, right? Because you didn't break above here, you didn't break below here, so you're just kind of sitting happily in this area, right? So if we're expecting liquidity, either it's going to be above these candles here, right? Or it's going to be below these candles here. I mean, that's typically what we see. So pretty simple, right? If I'm expecting liquidity, it's going to be above or below. Am I going to take the liquidity play? Probably not, right? Because I don't know where the liquidity will be grabbed. Last time, well, there is no last time price pushed above 2086, which means that I don't know where price will need to tap into before we start retesting those highs if we want to continue pushing up. And I don't know where price wants to tap into above the range before it wants to come down, right? No idea, because this is all-time highs. And there's no data besides these candles here. And just based off the daily, it's not enough kind of price action, not enough candles for me to solidly tell you exactly that kind of level I'm looking for it to tap into. But I'm understanding that if you look to, you know, just left here, we have pretty clean traffic to come down. We have some traffic, you know, some resistances, some supports, you know, along the way, but pretty nice daily clean traffic to come down, right? Towards around this 2077 area. So if we do end up breaking down and we have liquidity, we have really nice range to fill down, right? So that's my daily, understanding that we are now in a range, which is fantastic. On your 4 hour, this range is looking is looking pretty nice actually, right? So I'm actually going to keep it at 2050 because number one, it's also a round number, and I think there's some concept out there about round numbers being, you know, psychologically people want to stop at that level or whatever it is. But I would say if you really want to look at price action, I would say this is probably your level at 2157, right? And on your 4 hour, it's looking like you also kind of stopped around here. So you have a slightly smaller range, right, that we're talking about. This range is between 2176 and 57, right? On your hourly, you probably have another range, which is somewhere around here, right? Let's look at the hourly, right? We have some range around these sorts of areas here. I'm going to probably put it around here, actually. Actually, no, yeah, I'm going to put it below. I'm going to put it around here. So that's the kind of range that I have for the hourly. For this, I'm going to probably put around... this is an interesting one. Probably around there. Or around here, actually. This whole thing is a little bit messy on your hourly, so I'm going to just keep it simple, right? Just going to keep it simple. I'm just going to put it down here. All right, so 4 hour. Let's go back to the 4 hour, right? 4 hour is pretty bearish at the moment, right? We kind of came from these areas down, broke some of these lows here, so we're indicating we're creating a lower low, right? Then we created a higher low, right? Now we're coming down to create that lower low, but we haven't broken this low yet. So, you know, the kind of overall bearish trend, right, which we're trying to establish at the moment, hasn't been created yet, right? Any given point, price can now start re-breaking this high to continue going back up, right? And there's nothing we can do, right? Because in that case, that's just a continuation of the bullish kind of, you know, bullish trend that you've had for, you know, your last couple of days and weeks, right? So at the moment, nothing we can really talk about in terms of, you know, price having a full direction. I would say if we do just keep it simple and have our 4 hour ranges like this, we understand that there's probably something around here, which, you know, we don't have to specify exactly, but you have some wicks, some rejections, some wicks, right? So if this is our range, we haven't broken below, right? So we haven't got a closure below this range, which means that we don't have any indication that price, number one, wants to continue down, right? And number two, has enough liquidity to continue down, right? So again, I don't know where we'll need to tap into before we're able to kind of retest these lows, but we do have pretty clean traffic now, right? So for example, if we're looking to re-break this low, we have clean traffic down to here as our potentially break-even area at 2150. And then we can look for potential runners to continue down, but I wouldn't really hold too far, maybe around 2147 as your full TP areas. But you have pretty nice wick fill as well, depending on how price prints. So you have ways you can get into the markets, but I would say yes, I'm definitely bearish for tomorrow, because you kind of came down, massive rejection, tried coming back up, right? And now you've closed back bearish, right? So you have the wick to fill, number one, right? But at the same time, I'm not expecting this to drive very, very far, right? Just by itself. Like if news helps drive it, then yeah, fantastic, right? But if news doesn't drive it, then, you know, we may not see a complete wick fill, and you may see, you know, a bullish candle for tomorrow. But just because you're in the middle of the range, right? If you've come down to tap resistance, you're rejecting, what are you going to do next? You're probably going to head up, right? And if you head up, then cool, right? We have range to tap into around 2076. So on your 4 hour, that's just going to be top of the range here, right? So ideally, how you can potentially get into those buys with wicks is, let's get this annotation stuff up actually. So if we potentially get price closing above this 4 hour zone, I would say, right? Because I have some levels here, but we re-break this low, that's going to be step one for me. All right, step two, you know, it's going to be on the smaller time frame, but essentially on the higher time frame, it's going to be a steeper top bottom wick as well. So if we get a steeper bottom wick and then we start flipping up, then fantastic, right? And so I've drawn this wick specifically at this area for a reason, right? And just looking left, where did we tap into last times, right? So first of all, to actually drive outside the range, right, we didn't have enough liquidity, so we came down to these areas. So ideally, a tap into these areas, recreating this bottom wick for this 4 hour, right? That would be very much ideal for me. Secondly, once you do close above, right, you come back down to these areas, you come back down to these areas to grab liquidity. So, you know, potentially looking for a similar play, right? If you can come down, tap on your 4 hour, and then continue going up, then yeah, we can potentially take, you know, some wick entries to continue going up, because you've rebroken this low, to, you know, at least to the flip here as your break even, and then potentially some runners up to this 2076 mark. So some pretty nice positions, I would say, that would align quite well, you know, with daily potentially wanting to go up once you get these closures above. On your hourly, what I'm going to need to see is probably a closure above here, right? So once you get this closure above, I'm understanding that you came back down to these areas, because you wanted to close above here, you didn't, came down, grabbed liquidity before pushing. In this case, you came all the way down to these areas. So if you can create that bottom wick first and then close above on your hourly and on your 4 hourly, I'd look for those kind of bottom wicks for us to get into some wick entries to go up. In terms of sells can happen, right? What I'd like to see is a rejection, right? So what does that mean? Ideally, right, your 4 hour can potentially continue to go up or whatever, but then, right, this is the most ideal scenario, right? Price closes something like this, right, with bearish candle like this, right, with a very nice top wick, right? As that's happening, next candle comes up, you know, creates a top wick, and then we can look for some potential positions like this to continue going down. And again, I've drawn these wicks purposefully, right? I'm looking at this, right? Last time price wanted to drive, tapped into these areas to come down to these areas, to come down to these areas. So you have range for buys and sells. I'll need price to kind of tap into this 2166 areas regardless of what really happens. So if we can take advantage of some buys after you break the lows, the flip of potentially the daily to continue back up, that would work as well, right? But I think that's going to be a little bit more difficult, given that your current 4 hour has previous 4 hours closed bullish, right? So high chance you're going to come up to fill the range first. But if that does happen, we can look to take some buys, maybe potentially above this range would be quite clean. If that doesn't happen, you fake out on the smaller time frame to come back down, then yeah, I'll be looking for potential positions. And once you have this fake out, right, maybe this will be a little bit higher, who knows. But once you have that, you have clean range to fill from here down to here, right? And for me, right, what I'd look for is probably the flip of the candle. I'll wait for the flip. I wouldn't get into a wick entry just because any given point, because you haven't broken this low, it hasn't really shown me price definitely wants to come down, and you haven't broken below here. But what I can take advantage of is if it comes up to create this steep top wick and then flips, right? Or maybe the break of the lows or whatever, right? You have range to fill down to here. Given that, you know, if if your overall candle, right, if we redraw this a little bit, so if your candle, like, let's say it does this, this would be, I would say, even more ideal, where you come up to here, right? Then you have a rejection candle that looks like this, right? Then in terms of, I would say probably, yeah, like ideally it looks like something like this, right? And then your next candle, right? And this could be in any order, right? The wick could be on the kind of bullish candle, or it can be on the bearish candle. But you know, if it does something like this, next candle comes up, maybe taps into these top of the wick areas, right? So not that much of a top wick, and then comes down, I can look to refill this entire range down. And I don't really need to care about it breaking this level, because the range I'm trying to play is between here, 2166, and 2157, right? Anything up below that is not guaranteed until you get a breakout below. So once you get this, you essentially get the 4-hour onion, right? With the top wick confirming that you want to continue going down, right? Because if you wanted to continue driving up, you would have from here, right? And if you re-break the lows, it just means that you failed to re-break the highs, and in that case, you've re-broken the lows to create a lower low on the smaller time frame, and that's, you know, that's a continuation of your bearish bias, and you'll probably see a break of these lows if that happens, right? But the only way I can't get into any of this is if there is a bottom wick that comes and breaks these lows. If that happens, right, if it breaks this low, I don't think I'll be able to get those sells that easily. It'll be a little bit more difficult. But yes, because this whole idea is based off of the fact that this daily may not have that steep of a bottom wick, right? And because I'm bearish for the day, right, looking at overall kind of candles closing bearish for your daily, right? So any given point you have this range to fill, potential wick fill, right? So it makes sense in terms of those time frames. But yeah, just playing these ranges, I would say you're in a pretty nice area for price. You know you have some buys and sell opportunities. So yeah, it's pretty nice, pretty nice. Any chat questions? I mean, start posting them at SCFX. You have a question. We'll get to that immediately. Just giving a chance for people to post some questions about the charts. But yeah, hopefully it kind of makes sense. I think the analysis today it's okay. It's not bad. Okay, so chance to explain the buff journal. You're trying to make your own. You're confused. The difference is between a play and a setup. So I would say it's again, it's really your own definitions. Like, if I tell you this is the play I'm looking for, I would say for me the definition of that is the setup is essentially the play, right? It's how price is printed for me to take that position, right? For me to think, oh, okay, yes, this is what I'm looking for, and that's the play I've been looking for. The entry, in my point of view, is kind of how you execute on the play, right? And that's your plan going into it. That's the part 2 of the plan. So it's kind of your own definitions, but that's kind of how I've seen it. So a play and a setup are basically the same thing, I would say, for me. But yeah, like the buff journal, I mean, a lot of it is customizable, right? You can kind of change up the wording, you can change up how anything is kind of named, and yeah, it's pretty free to modify depending on how you want to, you know, categorize things or name things as well. Oh, we got some boys in here. Let's hear it from the boys.
Brother.
Yo.
How are we doing?
We are doing well. How are you guys doing?
Yeah, doing well, thank you.
It is March 15th. What the fuck?
I feel like 2024 has literally just come.
Literally, bro. I feel like I was just saying we have the whole year to trade.
Bruh, like we've lost 3 months. Like I don't know where that's gone. That's one season just gone. Like I don't know what's going on.
Gonna make me have an existential crisis or something.
Would you consider
get a
having a
trade today,
psychology?
Elvis?
What was that?
Did you get a trade today?
Yeah, I did. I took. I was anticipating this essentially. So I mean, I got into the trade after this broke this low. I think it was on the 5. It broke this low after this. So I was like, okay, top of your range, retap top of the range, no top wick. You're expecting it to probably continue. You have breakouts below. I was like, okay, I'm gonna wait for the stronger confirmation, which is the next lower low. So I took one here. Oh no, wrong one. I did not take a buy there. I took a sell. And then my stop loss was like above like this or whatever it was. Was it this? Yeah, something like this. Oh, I think I based it on the 15 structure. It was above this wick. And then I took a pineapple here. Because this was a 30 that opened with no bottom wick. This 30 here had no bottom wick. So I was like, okay, brother, you just know you're going to create a bottom wick, right? You're just so bearish in terms of your structure. Obviously, you're slowing down, right? But this is top of the range for me, right? Around these areas. I think I would have been better off with this wick entry here at this top of the range, which I was potentially looking for as well. But I was like, okay, if this wants to flip with this having no bottom wick, this having no bottom wick, high chance you are going to flip to come down for your 30 to do whatever anyway. So a wick entry here, right, is also okay because I have room essentially to X out, break even, or just like slightly in profit. And I basically closed off full like once it hit here. I had 2 positions here for some reason. I don't know. I think I accidentally opened 2, so I was able to get out like around here. But I mean, in terms of the plan, right, I got out like here, bottom of the range. So yeah, basically that was. I mean, there was also a second one where it just dropped within like a couple seconds. I'm trying to find it. Like, was it this? Like the rebreak of this low? Yeah, I was just like, okay, yeah. If you're looking at this overall structure, you rebroke this high, right? Then you're looking to come down. Where was this? This was 12.
Oh yeah, this was just before the 4-hour close. It just started driving.
Yeah, it just started driving, right? So this was this area, right? So you had no bottom wick here. You pushed. I think this was news, right? You pushed down, then you pushed up, started coming down. So I was like, okay, if you re-break this candle, right, high chance you're going to come down to fill this news wick, right? So I took a sell around like these areas or whatever, like below this wick, and it just like pumped like 16 pips in like 1 second. And I was like, okay, cool, I'm out. So I had that, and then I had this, and those are kind of it. Like after this trade, I was just like, because from past experience, I'll continue to hunt. I'll just be like, man, this was like basically a break even. Like, wow, bro, like I know it's gonna drive. Let me just get in. So I was just like, yeah, I'm just gonna close the charts and do something else. But yeah, worked out. Did you guys catch anything?
I don't know how it's. I think it's just like I don't know how to. Like I don't know how to explain like my logic behind holding the position. So there probably isn't, right? I feel like
God, here we go.
No, but this position was with wicks on Tuesday night. It was here in this range, and I held the position because I missed my entry. But my stops, I just put them like scroll out. Well, if I'm being honest, I put my stops 21.99 because I was like, yeah, if price is going there,
I'm looking for a sell.
Yeah, but I was just kind of like, because in the trade, I didn't have any idea like of where price will reject other than all-time highs. But if you go to the 4-hour, it clearly, and I think it's.
Where was your entry?
Go to the 1 hour.
Yep.
Zoom out.
I mean, like.
Scroll over.
Oh, okay,
it was like here somewhere yesterday, or like Tuesday night. Yeah.
Okay.
And I just had my stops above, but I guess in like managing the trade, it made me realize like price like price is logical. Like price doesn't just act random. So like we created the resistance off of this like area, I guess.
Yeah.
Like once I started seeing that, I was like, oh, I was fine. And then like I exited the trade like here, and then yeah, I got out of break even. But it's just like I don't know if I was just holding because I was just like holding, like hoping that I would like it would reverse, or was I being logical? Like actually, like I didn't even think about it till I seen it. Like price, like obviously make that resistance at that level.
Yeah. I mean, I don't know what Wix's logic was here because I wasn't there at the time. But looking at this, it's pretty disgusting, man. Like, I mean, you just rejected off of here. You're expecting it to come back down for liquidity to go up, right? But because this is like kind of a no volume period, I wouldn't really expect much to happen. And then once it starts pumping up, right, you could say, yeah, I'm waiting for liquidity to come down, but then you're getting closures above, right? So, I mean, up until I would say this point here, nothing was confirmed that you're actually going to continue coming down. Like this break of this candle low, right, and then a closure back into this range, because you formed a low, but this could be liquidity to continue driving up, right? So, I think, yeah, I mean, the sell here, I can probably imagine he was just looking for a break of some of these lows before driving up similar to this, right? But yeah, I don't know if it was.
And also, I think I exited bad too because I exited once the 30 closed here, but like once we closed below there, like was it that way? Or no? It was the 15 candle. Wait, go to the 30, the 15. Like, shouldn't have I held because technically we're closing in, and then like we were gonna fill at least to here, or
I
like
wouldn't say you definitely would filter here. I would say you would definitely, like once you close, I mean, if we just go back to the hourly, right? You close back into this range, you understand you have an hourly range, right? Kind of between here and like here, right? This is what I would say your overall range. So I'm understanding this is good to fill, right? So you had wicks tapping into these areas, wick rejections to come. So I would say like if you were able to get out here, then yeah. But
Yeah.
if your position was below and you don't have any pineapples, then yeah, you probably couldn't have. And you know, if you're looking for, you know, price to continue coming down, you'd probably want to see a retest of these highs before that happened. But I think because this was news and you rebroke the news candle, high chance
my
you're gonna fill
pineapple
it
should have been
next
here.
What was that?
My best pineapple would have been there.
I mean, did you get into a pineapple or no?
If you go to the fifth, I got a pineapple around like yesterday. I got a pineapple here, like, but I don't think that was a good. I don't know like with that position.
I mean, I guess on your 30 it was okay because like you had this massive rejection, right? Maybe you were looking for like the 15 flip or something to come down, but I would say this is a bit of a riskier pineapple.
Yeah. I mean, I was risking 1% on all positions, so but still my stops were like, it would have been, it was 2 positions, so it would have been 6% because stops were 300 pips.
So how are you risking 1% per position, but your stops would be 6%?
Well, it's just 600 pips, right?
So you're using 1% as 100 pips then? That's what you mean?
Yeah, and the stops were 300 pips.
Yeah,
per
okay. But yeah, I would say like essentially for the trade, once you broke into here, I would say you have a pretty good understanding that you're probably going to fill down to the hourly and 30 range. To break into this, again, because there's so much traffic here, it's like, I don't know what's going to do.
My stops was 21.99 like just overkill, or could I have put them like
21.99 is a little bit overkill. I mean it's the reason you survived it, so I wouldn't like let's say you got into something like this. 21.99 is like all-time high, man. Like that is a 360 pip stop. Like that's nearly a 400 pip stop. Like for like, I mean, in terms of structure, right? Obviously this position you have no top wicks here, no top wicks here. So what I would have done potentially is look for an exit after you re-break some of these highs here or whatever. Like, because if you re-break some of these highs here, you're understanding that, okay, there's a high chance that price is going to come up first, and then we could, you know, get out at, you know, small loss or whatever.
That's also what I was thinking too.
Yeah, because then you wouldn't have to hold through this, and you know if price wants to come down, it needs to grab liquidity, so you just wait for liquidity, and there's no logical stop, because this isn't really a logical stop, because you know it's going to come back up for a top wick here, all right? And you can't really use
even
this.
here, I could have exited, right? Like, once we're breaking above here, like, once we make this bottom wick and we're flipping, like, I would have known, like, we're going to probably...
I would say maybe, like, after this candle kind of came down, rebroke some of these lows, just started reflipping bullish, and then... Yeah, like, I mean, it's like it's a yes and no question in terms of, like, should you have closed early? Because you could have closed early, right? And then, held through, how much less is this? It's like 140 pips, right? So it's up to you essentially, but I mean, you could potentially look for like this trade to exit around here in terms of your stops or whatever. Let's say it's like 60 pips, whatever. Then you can look for something else as you're coming down. But because your stops were there, you were able to hold through the entire thing. So it did work out, I guess. It's just how willing are you to kind of hold through all of that structure? Because mainly is because you have all of this as clean traffic here, right? This is clean traffic. Looking to your left on your hourly, there's like basically no resistances, like no top wick here. This kind of cleared the entire range. So yeah, once you re-break this high, you're probably heading up. Yeah, like
I think I also did.
Yeah.
In like these trades, I guess they're not the best trades. I would say like these past. I wouldn't say any trade I take now isn't a good trade, because I feel like now I'm more looking for something in terms of like a couple months ago I was just basically like buying and selling, like whatever.
All right.
Like I'm still learning somehow, but I get. Oh, that's what I was trying to say. Like I feel like I guess I like seeing that price like is logical, and it's just not like moving for no reason, or like seeing like it tap into levels makes me I guess confident in my trading.
So when you were on Wix's stream, what was his entry? And you say you missed his entry, right? So why did you take? Did it make sense for you in terms of your analysis to take that trade, even though you missed the entry?
Well, I didn't miss the entry. I got his original entry, right?
Oh, okay.
And then he had a pineapple.
Right. Did you miss the pineapple?
And then I missed the pineapple, but then I got in like another position.
Yeah. Did he take a loss, or what happened?
No, he ended up getting out, but when he got out, my positions were like at like still in the negative.
Right. Okay.
But price still, like at this time, like it looked like we still needed to break the previous daily lows.
This was Tuesday.
But we didn't do that. We just kind of trickled up. Like we never. This was the opening, and then this was like all New York. That was all New York, and then this was today basically.
I'm just trying to check if I took a trade on Tuesday during
Tuesday evening, Wednesday morning, and then London. I think London we ran. Or like London we started.
Tuesday was the 12th, right? Yeah, 12th. Did I take anything?
I think in terms of like managing the positions, I didn't manage them logically, because I think I just see like, oh, well, I'm not in profit. Let me just hold some in profit. But the trade idea has already played out.
Yeah, I mean.
But then also in terms of saying that, like I can always, I'm not saying like, I'm saying this in not in that bad way, but it's like I'm noticing like I can always end up coming up with another trade idea if I want to. Like in the trade, I can be like, oh, well, I can probably look for this. And it's like, but that wasn't what I was originally looking for, I guess.
Yeah. I mean, I think when it comes to looking for trade ideas and being able to be like, okay, yeah, like that could be the trade idea. I think you potentially are looking at too small of a time frame. So, for example, you're zoomed in on your trade, which is like a 5 or a 15 trade, and you're just looking constantly at the 515. So when you see structure being formed on the 515, it's like, oh wow, yeah, like if it breaks this low, cool, you're gone. But you're gone on the 5 minute, which is going to be a 5 minute range, which is probably going to be 10 pips, right? So you're thinking, oh, okay, yeah, I could probably capture, but you're trying to capture 10 pips in a 10 pip range, which is going to be 100% of the range. Whereas you need to potentially look at the higher time frames to see how all of that aligns, and that'll give you a bigger picture into what potentially may happen. And like, I mean, that's something I've done a lot in previously as well. Like just being in a trade and being like, I mean, I could just add a pineapple here because, you know, it's breaking the low, it should come back in and whatever. But what is the higher time frame telling you, right? Like you have to, like for example, the pineapple you had at these areas, right? Oh yeah, cool. You had this massive rejection, close you back into the range, right? But on your 30, you know, you closed above here, closed above most recent. On your hourly, right? You're still also closing, you know, like for example, you're breaking the lows now, you're re-breaking the highs, right? Your 4 hour also is, you know, at that given point, you were bullish and you were bullish above these areas, right? So a lot of it is potentially being too zoomed in, and taking a kind of step back and looking at, okay, like I understand that I'm in this trade currently, but if I wasn't in this trade, what would my analysis be? And if that aligns, right? So for example, you're in this area and you're like, okay, cool, you know, price is coming down, re-breaking some of those. You've created a high. What I'd look for is potentially, you know, price to come up to create this top wick for this wick, this candle here, like here, and then I'll look for the re-break of the lows, because that would confirm to me that you're not trying to continue going up, right? Because you'd break some of the highs, and then you'd after that break some of the lows, so higher chance you're going to start coming down and filling this range down, right? But until that happens, it's probably difficult. And you know, I would say because you're zoomed in on the 515, this will look really juicy to you, right? And don't get me wrong, like it's looked fucking juicy to me previously as well. Like I'd look at this, be like, wow, look at this rejection, fake out coming back in, let's get in, right? But yeah, that's usually when you get screwed over.
Yeah, I get what you're saying.
Yeah.
Also, too, I think like more to what I also was saying too was just like, okay, so I get in that, say like that trade, right, with Wix, right? I got in right for one idea, and then I was trying to hold it for another idea. Like I started saying like, oh well, I need to see this, or this is probably gonna happen. I think that's just like, I don't know. Because in terms of that, like, how often can I do that accurately? Like how? Because then it's like I'm not. I guess I would say I'm following my plan. I'm getting in the trade, and then I guess it just depends. Like if price is showing me that, then like, I guess it makes sense, right? But if price isn't, right?
Yeah, I think like what I'm trying to do at the moment is, because you know, kind of what Tom has been doing as well, like just separating trades in terms of like what is your trade idea, because ultimately you want to be profitable with your trades, right? So taking Wix's entry and whatever, or taking Don's entry, cool, I mean that can happen, right? But at the end of the day, you'll be the trader that kind of manages your trades 5 years from now, 10 years from now. So to do that, you need to be confident in your own trading ideas, and you know, have a way or like one account, or separate it, right? Separate the different trades, just so you have a better understanding of, okay, yeah, what is my profitability? What are the setups and plays that I look for? What is my win rate? And like, why am I taking these losses and stuff like that? Whereas if you mix the two, occasionally you'll be like, oh, okay, yeah, I'm just winning and losing. You'll get into a bit of like just a muddled situation where
one thing I could
everything is
just just do what I did like in the past, was just have one journal for Don and Wix's trade, and then have my own journal for my own trade.
Yeah, exactly. Yeah,
Just like I said, even this trade with Wix, I feel like even though I would consider it a bad trade, I think I still learned from it, so I think it's still good. But so I think I don't lose anything from taking their trades. It's just a matter of, like you said, not to. Because I think it's more of, like you said, understanding what I see, understanding my high quality setups, and like actually understanding them like 100%, like so that I can constantly take them and be confident in taking them.
Yeah. Yeah, I mean it's a journey though, but.
What I'd say with like the management stuff, You mentioned a couple times when you were explaining it that Wix was looking to get out break even, and he did, but then because your position was still in a loss, you didn't bother. I
Yeah,
think like that way of managing based off your entry and your break even point just doesn't make sense logically, right? Because price isn't going to come back to your break even because your break even point is there, and then it's going to start reversing. It's like going to do what it's going to do based on the price action. So I think you sort of need to disconnect your entry from where you want to manage. So if price is showing you, you should probably close off because it's going to keep driving like the hour closure above that resistance. Then that's what you should be doing. Just because it's a loss, it shouldn't mean that you're not managing it.
yeah. And it's not like I'm over risking either now. So it's like the money is like, it still matters, but it shouldn't matter because it's just trading now. Because it's like I'm not trying to like change my life in one trade. So it should just be like a regular trade and not trying to. I think that is just something I'm still working on, but I think I'm over.
And also, like minimizing your drawdown as well is like a win in itself, right? Because we do all these like wick entries and stuff. I'm trying to minimize our drawdown, but if you're holding a trade, even though technicals are telling you that you should be getting out, you're just exposing yourself to way more risk than you need to. It could be better. Like if say you still believe in the concept, but the trade and the price action is telling you that you should manage in some way, you can even just like close out the position, and then let's say you got the closure above the 21.65. You close out the position as you get the closure above that. But if you're expecting some sort of rejection at the 21.76, just re-enter your position there. If you're the same sort of analysis still
Right.
biased about those lows.
Yeah, I get you.
Essentially, like you're making, like in terms of minimizing your drawdown, you're essentially making that whole entire range in profit because you're not taking that drawdown in the trade. Essentially like hedging, right?
Yeah. But yeah, I would also like kind of same point, right? Like if say Wix is in a bit of drawdown and he kind of exits at break even, but you're in a bit of drawdown, I'd say it doesn't matter where if you're in drawdown or if you're in profit. Like that's probably where the trade stops making sense. Like there's a
Yeah, that's
reason.
definitely like it's something it's not like I think that's like a problem I'm for sure like that's something that's like it's such like a problem like I've had before like I know it's like
Yeah, yeah.
Let's see
I'm sure you're probably quite clear on it as well. It's just, you probably need to experience the mistake a couple more times before you fully adapt to it. So, I mean, let it just run its path. But yeah, I'm sure you'll be a better man at the end of it. Apparently, Eddie Lifts had the same trade as you, and he got out at minus 30 pips.
Yeah, you see, like, and that's the thing. Like, I just need to disconnect from whatever because it's not the same. It's more the trade, understanding with the trade idea.
Yeah, I mean, to a certain extent, right? That is also a different type of FOMO, right? Being like, oh, the trade doesn't really make sense here. Technically, like, I don't know what frame of mind you would be in during that trade. For me, if it was like me a couple months ago, I'd be like, my frame of mind, I wouldn't be thinking about the trade if it makes sense or not. I'll just be like, shit, I'm in a bit of drawdown. It's gonna come back, right? I'm only in like 6 pips or whatever. It's gonna come back, right? So that mindset immediately is just FOMO, right? It's like it will come back means that I'm gambling that it's gonna come back, right? Yeah, more experience, and then hopefully it'll get solved along the way. Obviously, you have to think about it a little bit more, have some actions to kind of prevent yourself getting into those situations or digging yourself out of those those situations, and you'll kind of have those kind of mitigation measures. Because at the end of the day, what was that?
I was just gonna say this whole week I didn't take any of Don's trades, so I feel like I just need to start taking more of my own trades.
Yeah. Yeah, because at the end of the day, right? Let's say Don or Wix just stops streaming in like 5 years. What do you do? Does that mean the entire of DVS is now going to become unprofitable? Right? I mean, there's a chance that people don't learn themselves and they just rely on them constantly for trades. then yeah, they'll always be, you know, dependent on Wix and Don. But we want to be independent, right? We want to be able to do it ourselves, trade the sessions that we can, right? And adapt the markets to our sort of lifestyle, right? So say in the future, they probably stream 1 day a week or 2 days a week, right? We're able to still catch trades on the days that they're not here. And also maybe, you know, we're trading a completely different session because we're in a different country. We're still able to do that because we have the skill set to continue. So just detaching that dependency on the kind of on Wix and Don at the moment. But that'll come. So yeah, just trying to fix all the psychology, FOMO, stuff like that before that happens. Yeah, they're a massive asset for the time being. Aurea said, Jacob, I think you go into the trade with one idea, and when it goes against you, you build around this idea of how I can succeed in this no matter what. Yeah, I think we covered that a little bit, but yeah, I think there's some truth in that for sure. And I think it's a trap a lot of us fall into, right? Like, because you're thinking about that one trade you get into, and it's like, wow, like how can this trade be profitable, right? But yeah, sometimes if it's just a bad trade or like it stops making sense and like we have our stop losses set or whatever for the initial trade idea or whatever, either we just let it play out or we close it early if we know it's going to move in the opposite direction quite aggressively, right? And there's clean traffic, stuff like that. But a trade can be a loss, break even or whatever, right? And if you're able to accept that, I mean, just prepare your kind of psychology initially when you get into the trade that, yeah, like this could be a loss, and if it is, nothing I can do about it, right? I can only manage the trade, and if it is in drawdown and I manage it while it's in drawdown, that's fine, right? As long as you're managing it with a plan as well. You get in with a plan, get out with a plan.
Yeah, right. Like even in these trades where I'm not fully, I want to say, I guess just where it's just not a fully good trade, I would say. I think I still have a somewhat of plan compared to even where a couple months ago I would just like probably would have exited like at the top of the range, like negative whatever pips, and then wouldn't have waited. Right. So it's like,
yeah, knowing me and the way I trade as well, like I'll probably stack pineapple, like, well, you know, like a couple months ago I would say probably would have stacked like 2 or 3 pineapples, right? Like I probably would have had your same pineapple because I'd be zoomed in. I'd see that, oh yeah, price is rejecting off of this level here, cool, like I'm gonna take another pineapple at this top of the range here because it's gonna be a wick entry and I'm gonna get it, and then it'll just continue to come up, and like once it taps into this area, I'm like, yeah, it's probably gonna continue breaking up, close full here, right? And then just get completely fucked because it just starts rejecting, right? So I mean, to some extent that's kind of how price action moves against a lot of the human psychology. Like if you're in a trade or whatever, it's going to move in ways that, you know, it will move, and things that you can potentially try to predict, but when you're too zoomed into your specific trade and how you can make your ideas play out, situations like that just happen. Like the sells may not make sense. Like after this, maybe your initial trade sells didn't make sense already, so why continue to force it if that's not the direction, right? Yeah, good topic to talk about. I think a lot of, it's just everything's linked: psychology, the setup, the plays. Yeah.
Johnny, did you guys have anything?
Not really. Into
I was looking at something earlier, but didn't take it. Oh, like half one on the 15.
Half like here.
Yeah, after that candle before, so the 115 candle.
Did this? Oh yeah.
Yeah.
I didn't
And then I
see
was
that.
thinking, oh, okay,
Off the rip, right?
that could, yeah. And
Yeah.
I really debated taking the break of the low of that doji
This
candle.
candle, yeah, I know what you mean, yeah. And then stops above here.
Yeah.
Yeah, no, I was looking at that and then I was like, okay, I could take it because all of this just happened, right? Like you came down really aggressively, came all the way back up just to close bearish here on your 15, right? Technically, right, you're understanding that if price does want to continue driving, once you get a closure below here, you get a drive. But with this massive rejection as well, probably looking for price to continue down. Yeah, I mean, it was pretty clean. Pretty clean. I would say. I mean, what stopped you from getting in?
I don't know about it for too long, and then by the point, because I hadn't been looking for it specifically.
Yeah, okay.
It wasn't a trade that I had in my mind before, so I hadn't really, sort of thought about where all the levels that I wanted were for it.
Yeah.
And then by the time I was like, oh shit, that's on, and then was sort of rushing through all the time frames to try and get it. It had already broken that low, and I was like, well, I've missed the advantage on my advantage point now. So,
because your entry would have been like, what, the break of these lows here, right? So
it would have been at 2163.1 ish.
Yeah, like this kind of this area here. Yeah. This low on this candle, and then your advantage point is 14, 10 to 14, 12.
Yeah.
Yeah.
But then if it's already driven past that point, then
I mean, once it's tapped, right? Like any given point, that could be a bottom wick for you to continue driving up. Because with this, I mean, you have, I would say, overall direction is relatively clear. But once you started slowing down here as well, I guess it's difficult to say for sure. Because if you wanted to drive, right, there was no reason this 15 was going to close here, then close bullish. If you wanted to drive, like you probably wanted to see, you probably would have seen some rejection after you closed respecting this range then. It's a nice top wick though. That was a very nice top wick.
it would have had some drawdown, I think.
I mean,
maybe not actually.
I mean this stop is 42
maybe it was
pips.
the last 5 of that closed in the bottom wick.
Yeah, it did. Yeah.
I think that's what. And then as I just took too long to think about it. Basically.
Yeah, no top wick and then no bottom wick. But we see this so often. Like this as well, right here. This candle was kind of the same, right? And then this was also kind of the same. Just every time it really wants to drive, it's just, yeah. But it's alright. Any other questions from the Zooms or from the YouTube? If not, probably because the market's opened already. We can. I mean, nothing. It's not really doing anything. It's just stopping around here. So.
I wonder. I guess for next week, would it just be like if this candle closes bearish, would we just be looking for another bearish candle on the weekend?
On your weekly, right? So if
on a celery, or would it just be like both possible?
They're both possible, right? Because essentially, if you have a bearish closure like this, essentially, right, what decides price is if it comes up for a bottom wick first, or comes up for a top wick, or it comes down for a bottom wick first, right? If it comes up first and you have a candle, right, that looks like this, what can you expect, right? If it flips, it's gonna flip to fill this range at least, right? So you have, that's like 130 pips, right? If it doesn't, right, and if it comes down first, and then it flips, bro. Right? It's that simple, right? Essentially, if price comes down and then flips, what you have, what is the cleanest traffic you have? Jacob, what is the cleanest traffic you would have in this situation?
This range, right? Like all this range.
It's this range, right? Once you flip from here to here, this range is basically guaranteed. Same thing with the previous monthly, right?
But your only target would be like the top of that range, right?
Yeah, it would basically, like, the only thing is you'd probably have top of the range as your at least your break-even point, right? Because this is obviously the weekly candles, so I mean it's hundreds of pips, so you probably close at like 10, 15 or whatever anyways, right? Depending on your smaller time frame ranges. But you could leave runners potentially as you continue. If it's going up, then yeah, I'd say runners for sure. We will definitely try those. The sells, it's still, you know, difficult because any given point you could get a fake out to start heading back up. But yeah, like, I mean, same thing with the monthly, right? Like with these two lines that we had previously, like here and here, just come down, break this low. After that, when you flip, what is the cleanest traffic, right? Cleanest traffic is on the flip up to this area. Right? And if we zoom down to the weekly, after this happened, you literally had like a bottom wick for how much? Like this was about 90 pips on like a weekly candle, flip straight up. Yeah. And then like, look at this. This was the Thursday closure, Friday pump, right? So it's just, once you actually grab liquidity, break out of the range to continue, it's clean traffic essentially. Like, and on your higher time frame, it'll look like this, a respecting of the range. And then occasionally this, right, would be an onion potentially for you on your weekly. On your daily, right, it's a fake out below the range, come back in, right? And it took 3 days to happen, but it's a fake out. And then on your 4 hour, it's just, you know, structure being formed, and you have liquidity at this point as well. So
Would you say next week's price action should be more straightforward since it's like not in the range? It's kind of the candle breaking out, or like
I would say it's basically the same. I would say it's slightly easier to trade because if you do close bearish, right, it's relatively simple, because if you break the highs then come down, you're clean. If you break the lows then come up, you're clean, right? The only thing is, because we're at all-time highs, we don't have too much data. All we have is this at the moment, right? So we'll probably need to see some sort of, you know, range 2 being formed if you want like actual sells below to capture anything below, like from here to here, right? We'll need to see ranges being formed here. If you want to continue going up, you'll probably stop somewhere, right? So you probably want to see another range above, retest of some of these middle ranges in between for liquidity, and then before you can get those continuations up. But like in terms of the actual candle structure and the price action, if you close respecting this 2150, it's nice to fill on your higher time frames in terms of buys or sells. Yeah, but I would say even for this week it was relatively nice. Like if you wanted to continue going up, right, you needed a bottom wick because you started slowing down here, right? This was your Monday candle, right? If you didn't have a bottom wick for your weekly, you started slowing down. Also this, right, obviously you're bullish, but you're creating resistance along the way. So at some point you're going to stop on your daily, and this was like the first sign of price stopping, because we did this analysis on Sunday, right? Like, oh sorry, on Monday during the members stream, saying like this candle is not this most bullish candle you've seen in your life, right? Any given point, next candle can be pretty bearish to come down. So once you created this support, cool, this is exactly what we're looking for. And now you have a support. It's just a different phase of the market. I wouldn't say it's like easier or more difficult to trade. It's just we had our push. Now we're consolidating. Then we're looking for liquidity potentially, and then drive up, right? Or liquidity and then drive down. That's basically it. Yeah. Cool. Right. probably gonna end it around here. Any last questions? If not, I will see you guys on Sunday anyways.
No, you guys have a good weekend. We'll see you guys tomorrow.
Fantastic.
Yeah, have a weekend, guys.
Yeah.
Yeah.
Have a great weekend. And yeah, we'll speak on Sunday.
Yeah, cheers, others.
Yeah, cheers for joining.
Sunday.
See you guys. See you guys.
See you guys.
See you.
Yeah, and then for everybody on the YouTube, thanks for joining up. This is the last stream of the week. Obviously, this is your second stream of the week because I've been doing some other DVS stuff, but hopefully that was helpful. We had some pretty good questions overall, some psychology, some to do with, you know, price action, some to do with the journal as well. So a bit of a mix and all round today, which is quite nice. Hopefully you all kind of got something from this session. Obviously we'll be back, right? We'll be back on Sunday. So if you guys have any questions over the weekends, or if you want to do some of your own analysis on some other pairs and then come back, feel free to kind of ask those questions. If you can find me somewhere and post a chart somewhere and kind of get my attention, that would work as well. But we typically do that during the member session on Monday. So if you can somehow catch me on like the signal chat on like whatever, then yeah, go ahead and ask me some questions there. Always keen to discuss, because there might be stuff I can learn as well. Yeah, Kev, cheers for joining up, and thanks to everyone who kind of joined up. Have a good trading day tomorrow, right? Be a little bit more careful. We're looking for a bottom wick for this 4 hour if it wants to drive up, right? If not, we're looking for potential sells once you create a resistance. But that's basically it. Yeah, have a good weekend. I'm not going to speak to you guys before then, so you know, relax. Don't FOMO into like Bitcoin or whatever, even though it's pushing really aggressively at the moment. But yeah, we'll always be able to catch some more trades for next week, so don't FOMO. And relax, have a good weekend, and I'll see you guys on Sunday. Cheers for joining up, and peace.